So, hi everyone, and welcome back to another interesting company. This time it's Ernst Russ. You might not have heard about this company, even though it has a very long track record and a very long history. The co-CEO Josef Schuppmann will run us through the presentation and enlighten us about the opportunities which lay in the global shipping industry. Since most of you have participated in earlier meetings today, you know the housekeepings. The presentation will last for 20 minutes. We will have time for Q&A about 10 minutes afterwards. Please put your question into the chat box on the bottom right. And as you all know, the presentation will be recorded and will be presented on our research hub later on. But without wasting too much time, I'd like to hand over the presentation to you, Josef. The floor is yours.
Thank you, Thomas. Warm welcome to all of you. Welcome to the presentation of Ernst Russ. I was scheduled to be here with my colleague Christopher. Unfortunately, he had a COVID outbreak in his kindergarten earlier today, so he cannot join. So I'll take it by myself. What does Ernst Russ do? We are an asset provider. We provide ships under operating leases to companies that offer freight services worldwide. Basically, this is an operating lease, and you might know this structure from the aircraft industry, where you would board a Eurowings flight, and then it wouldn't be operated by Eurowings or not owned by Eurowings, but it says operated by Air Baltic. This is basically what we do. For example, a company like Hapag-Lloyd will have about 300 ships. 200 of those will be on their balance sheet, and about 100 of those will be chartered in from people such as us. Basically, what that makes us is flexibility providers, and we provide two kinds of flexibility. We provide operational flexibility and balance sheet flexibility. Operational flexibility in terms of our customers have a certain seasonality in their trade. They want to try out a new trade without committing capex to that trade or moving their own ships from another service. So they use the services of companies such as ours to charter in ships for a temporary period of time to offer their services to their clients. And the other terms of flexibility we offer, of course, is balance sheet flexibility. In essence, if companies want to grow without the capex, they can do that with us with a long-term asset lease, as we do it in this structure. The way we currently operate this structure is fairly lean. As you see in this graph, we outsource most of the management to the subcontractors. This is partners that we have, long-standing partners that actually manage the ship. So we are in essence an asset holding that is doing the commercial management of the ship. We finance the asset, we do the quality assurance on our subcontractors, and by that we receive a charter rate, a daily charter rate from our clients for our service. Currently we do that with about 30 people, and in the current setup our focus is on container ships, but we do also have other sectors in our portfolio, and we look to grow that, but more on that later. The environment that we are in is heavily impacted in the last 5 years by first the COVID pandemic, when we had sky-high container rates, both in the freight side for the actual movement of the container, and on the charter side, which is then the charter hire that we receive by the container lines, which are our clients. Today's market is a bit normalized in terms that the great COVID inefficiencies are gone, but it's a fundamentally distorted market, both by geopolitics. If you know, the Houthi rebels are shooting in the Red Sea, so the people are going around the Cape of Good Hope with their ships, so that it's using up a lot of capacity. And then also the trade policies currently offer a lot of volatility. As you can see in the blue graph, the freight rates are quite volatile in the last 2-3 years, which in essence volatility breeds inefficiency. Inefficiency artificially reduces capacity, and if you have a lack of capacity with a stable or growing demand, as we do, then the prices of transport go up. I think fundamentally that is something that will not change, because we're entering a more fragmented, more volatile world system, where the rules-based Western dominated system is somewhat coming to an end. How have we used this volatility? We have been able to capitalize on it. We bought 2 large portfolios of container ships prior and during the crisis. These large portfolio buys at distressed prices were basically the cornerstone of where we stand today financially. Since the height of the pandemic, we have switched our acquisition and disposal model, or investment divestment model, to a bit more granular approach, where we use small inefficiencies and small asymmetries in the market to capitalize on one ship maybe being needed more at a certain time. Then we get rid of it at a very good price and enter the market, basically recycling equity in other ships at a more favorable price. This has led our company in the past five years to perform quite well in terms of earnings, revenue, and EBITDA. We have grown our fleet, and you see that the revenue is somewhat in sync with both the numbers of vessels and then the market that you saw earlier. It's important to know that we lock in these charter rates for a longer period of time, from a couple of years time to sometimes we've just done new buildings with 10-year time charter. So we lock in the current market if it's favorable for a longer period of time. And what is also interesting to know is, if you look on the bottom, that our charter rate today fluctuates, of course, with the market, but the operational expenses are fairly stable. This is our company as we are today. We have 26 ships on the water. We have already signed the contract to dispose one of those, which will be handed over before year end. So then we will be down to 25. We started the year with 29. We've used the year quite a lot to optimize our portfolio, and we signed a few months ago 2 vessels for new building, as I said, with a 10-year charter contract attached. The ships that we currently have on balance sheet, excluding the new buildings, have a market value as of last reporting date of about $560 million. They're a middle-aged fleet. So if you put 17 years into perspective, a ship usually has a lifetime of 25 to 30, sometimes 35 years on specific tonnage. And we currently have a backlog of on average 24 months duration of charter. If I go further, we have just published our results 2 weeks ago. That is our Q1 to Q3 reporting, 9 months reporting. As you see, the revenues and EBITDA, I won't go too much into that, as you can read that yourself. What is important is on the right side, we have on our fleet a revenue backlog of $433 million as of last reporting date, and it's diversified on various customers, and it's diversified on various periods of expiry of charter rate, which means that not at any given point all the ships come out in the open market all together, but they're rather staggered. So the effect that any change in the market will have on us will also be staggered. Also, a couple of weeks ago, with our reporting, we updated our forecast for the end of this year. We have now guided 152 to 162 million euros in revenue, about 97% utilization, which is the time our vessels spend. We call it on hire, which is basically if you have a ship on a charter contract and you need to do maintenance for 3 hours, those 3 hours are then deducted from your daily rate. So on average, 97% of the time we are on hire. What's maybe interesting to know there, that also that includes every 5 years the ships go into dry dock for like a special survey, similar to the German TÜV. This year is somewhat special in terms of earnings, because we did optimize the portfolio quite radically. As I said, we started with 29 ships. We'll be down to 25 end of year. From our normal ship operations, we have guided an EBIT of 48 to 63 million euros, and including the gains that we have, capital gains that we have when we sell vessels, which we typically do above book value and also above market value. We have guided 87 to 102 million euros. So basically what that means is we have a fairly strong shareholder. We have buy ratings from all the 3 analysts, and we just celebrated 20 years on the stock exchange. Our performance of the stock for the last 5 years has been fairly good, which then begs the question, why are we even here, right? Why do we need to do marketing? Me and my colleague, as I said, he's not here today. We joined the company fairly shortly, and basically we were hired to tackle these 3 problems. The first problem is that the company has, or as of 1st of January, 31st of December last year, had a fairly complex portfolio. Only 4 of the ships that you would see on our fleet list were actually completely owned by Ernst Russ. The rest was in joint venture structures. Now, if you report in German GAAP bookkeeping, you consolidate the ships where you have a majority. We have a majority in all these vessels, so we consolidate the entire fleet, which for both analysts and prospective shareholders and current shareholders is quite complex, because then we have a fairly simple business model. We charter out ships. We have a daily hire. You deduct the daily operational expenses per ship, and then you basically have EBITDA. And in that structure, as we started, you would then also have to subtract certain percentages of earnings that go to joint venture partners, which in essence is not really beneficial to have a very transparent share. We have seen this as a problem, and we have, as I will come to, have attacked this problem this year. Second problem that we have in our share, that we do have a very strong shareholder that we are very happy with, but 25% free float, especially on our market cap, is simply too small. There's no liquidity, and that obviously reduces the attractiveness of the share. Further to these 2, this company has been completely inactive in the capital markets for the past, I would say, 15 years. We had very low visibility due to that. There was the stuff you need to do to be listed, 1 market conference a year, and publishing of the results was done simply to keep the listing, but nothing was done to enhance the listing or even use it as a means to raise capital. What that has done is, if you have a fairly simple business model but make it complex in the portfolio, and then have a company that is fairly illiquid and doesn't really talk about what it does, you would have not very beneficial share price. On the bottom right, we just are trying to illustrate, excluding sort of liquidity on the balance sheet on all these kinds of things. When you take our fleet that we have currently in our complete ownership, and then our part of the joint venture ships, the market value of our fleet, again excluding liquidity on the balance sheet, fairly highly exceeds the market cap that we have as of today. We are tackling these problems. The first one, as I said, was this year was all about the first problem. We have reduced the minorities significantly. Usually, there's three options to tackle minorities. Either we buy out our co-shareholder, which we only do if we find a beneficial price, or they buy us out if they see a higher price as us, or we both sit together and sell the vessel to an interested third party that has an even higher price in mind than us. We've done all three of these options. We've sold ships to our co-shareholders in vessels. We've bought ships, and we have sold ships to the third market. And that you see the reduction in fleet, but it's in essence an increase in total ships owned by Ernst Russ. And if you go back one slide, you see that by the number of ships, it's half that we own in joint ventures and half that we own outright. In terms of value of the fleet, it's mostly tilted towards us owning the vessels outright, because we have bigger and newer ships in our sole control. We have also boosted our capital market activity. As I said, me and my colleague joined. I joined last December. He joined in August. We have taken up research coverage. We had one mandatory research coverage. We increased to 3. There's one more coming. MVB, as you know, since we're on their conference today, is one of them. We have participated in basically every investor conference that we could find, mostly to try out and to see where the relevant investors are for us. And we have enhanced our transparency and our communication towards the capital markets. So we increase the visibility of our share. What we've also done is what we see as a strategy fit for the capital market we operate in. For example, in the Norwegian capital markets, where I have historically worked, the investor base is fairly sophisticated in terms of shipping. So they seek out single risk companies. If they want exposure to the tanker space, they buy a company that is exclusively trading in that area. We are currently, of course, fairly heavily invested in container ships, but we see in the Central European capital markets a need for more diversification, and also a need for longer term fixtures, longer term charter contracts to give more visibility and to reduce the volatility. Because if you don't follow the shipping markets every day, it can be fairly hard to comprehend the volatility within the market. And so we do try to now develop projects that have longer term visibility. We have done 2 container new buildings with one of our joint venture partners, a strategic joint venture partner, where we have a 10-year time charter, which means the shareholders in Ernst Russ, after the building phase in 2028, have 10 years visibility of earnings. And if we do that across the various segments, with the duration that is as you see below, where you have various durations with various counterparts in various segments, the whole construct will be more resilient and less volatile. So we see an attraction there. How do we go forward from here? This year has been all about transformation. The management team arrived. We've done quite a few things on the structure of the company. We have increased our investor relations. Now we will enter what we call the disciplined growth phase. We will grow our portfolio. We've done the first deal with the 10-year charter on the new buildings. We will now increase the portfolio on various segments with various long-term charter parties to showcase the sort of end game portfolio that we want to achieve, and to get us to our long-term goal, which is a leading listed European shipping platform that has a risk diversified portfolio that is not necessarily only reliant on the swings of one segment, and also can hedge the segments what you essentially have in the end game portfolio here is a portfolio of counterparty risks, a portfolio of segment residual risks, and a portfolio of duration risks, meaning at what time in the market does the fleet come back into open charter. And we believe that with this sort of transition from the financially fairly stable position that we have currently, we see this as the vision going forward. So this is how we have started, and this is where we're going. I'm realizing now that I've talked quite fast, which means we have a lot of time for questions, which is probably good. If there is any specific questions, of course, I can answer them. This is for your reading purposes, and then I thank you very much. And sorry for the quick speech, but it's good that we have more time for some questions.
It's just in time, Josef. Thank you very much. Very interesting presentation. I know obviously that you had a very busy year with disposing some of your vessels, and you have been also active in buying new ships. We have a couple of questions, but let's kick off with one question. You mentioned the ship new build which you entered this year. This is a new playing field for you, as I understand. You have entered that with one of your joint venture partner. Can you maybe give us an idea to what extent your major shareholder, Peter Döhle, has played a role in facilitating that deal?
Yeah.
Or just in general, the role you have with your shareholder?
Yeah. So the Döhle group and the Döhle family, in essence, is one of the largest privately owned shipping, I would say, conglomerates globally. They offer all kinds of services. They do also offer, for example, ship management services and brokerage services to us. In terms of container space, that is really a benefit because they're a fairly large player in the container space, both on the liner side and on the asset owning side. They have done numerous new building projects, both for themselves and for clients. And essentially, the lean structure that I was alluding to, given that we're 30 people, and also the fleet size that we have, if we were to go to China or Korea or Japan, for that matter, and try to facilitate a deal as we have done here, we would probably have paid significantly more money and had used significantly more time. And that's simply because the pricing power of larger houses is quite significant. It's not only on the price, but on the quality you get for that price, what is included in that price, and when do you get the ship. Because especially in the last couple of years, there has been basically a race to secure yard slots. And we have been able, through the help of our major shareholder, to secure these slots. And then if you think about, we ordered 2 ships with 2 optional ships that we have yet not declared. So I'm not sure how long it is, but it's only a few days until we have to declare them. And since we do not have we currently do not have a charter contract for them, and we do not order ships without charter contract. And if you then have these 2 slightly smaller, more specialized ships, you especially get outpriced by the yards if you are even accepted. And our, let's say, role as a partner company of the Döhle Group has helped us significantly there to get the project over the line.
Perfect. Thank you. I think it makes perfect sense also with the 10-year charter terms and predictable cash flows going forward. Going to the other side of your balance sheet, meaning the disposals of vessels, can you elaborate on the rationale behind your recent vessel disposals? Were these driven primarily by attractive market pricing, strategic portfolio optimization, or the shift in your long-term fleet composition?
All of the above, I would say. So it's every time that a ship comes back from charter or is close to getting back, we basically we can fairly certain say what we would get in the open market and for how long we would get it. So we can fairly certain say that for any given ship that is open in 1 month time, you would probably get, this is random numbers for a random ship, but let's say you would get $20,000 a day for a 2-year period. We then take that cash flow and then we benchmark it against the market value that the ship has, and possibly momentum-driven interest any given week might give you. And if we see that the market price exceeds what we can earn over the 2-year period plus the residual, which is an assumption, right? But then we are rather sellers than buyers. And exactly the other way around, we have done acquisitions in the beginning of the year where we see with the sort of the contract the ship has left, which is fairly simple. As I said, the OPEX are fairly stable. So it's fairly simple calculation how much money you're going to make until the end of that contract. And then you have a certain assumption for the residual value of that ship in terms of what's the earnings capacity. And then you can decide, is that below or above my market price? If it's below, we are buyers. If it's above, we are sellers. Of course, in terms of portfolio optimization, this year has been a bit special in that we see a need for us to have a cleaner structure. So that was a driver, but we still have some non-strategic joint venture ships left, and we do not exercise the buying or the selling before we find a solution that fits our target range. So we do not do we don't only do it if it makes business sense. The portfolio optimization part comes after the making money part, right? So we buy and sell purely driven by the metrics that we take. And also long-term fleet composition. Well, it is a fairly high market in historical terms. We are pretty bullish on the feeder container sector going forward. Something that I think we do not have time to get into today, but I think you can read in MWB research. And therefore we are selective, but we are aware that we are in a time of the cycle where it's probably not inbeneficial to sometimes dispose of tonnage that maybe is not so relevant 10 years down the line, and rather shift equity into other projects.
That's it's a nice bridge to the next questions. I think we can combine them all together because they are all about the proceeds you have taken from these disposals. What's your plan with the money you've generated? Will you reinvest into newer and more fuel-efficient ships? Use the money for minority buyouts, which you have already mentioned, or how about returning money to shareholders?
Yeah, so basically returning money to shareholders to some extent. We paid a dividend this year. We'll probably continue paying a dividend next year. We are not yet in the phase of becoming a complete sort of dividend yield company, because what you see here on the slide that I just opened now, this is our end game, right? This is where we want to be. We want to have a number of ships in each segment with long-term contracts attached, and so this is where most of the proceeds will go, which is a shift in a way from the pre-2021 era, where these were purely speculative purchases of vessels, which worked out fantastically well, but we don't see long-term prospects in the German and Central European capital markets for a business model that is as speculative. So most of our proceeds will go into various segments with long-term contracts, and that's how we intend to grow our company.
Perfect. Unfortunately, we're running out of time. Very interesting. Josef, thank you very much for your presentation. For all participants who would like to learn more about it, you will find our research on the Research Hub. The next meeting, you will find the link on the bottom right, Friedrich Vorwerk. And Josef, thanks again for participating. And if you have a minute, we stay online.
Absolutely.
Thank you very much.